So what should you do with your money now that war has broken out in Europe? What are we to do? How is it going to impact our retirement? Is this time any different? In this video, I want to share with you some proper perspective on historical events so we can better inform ourselves now so we don't make costly mistakes that could impact our retirement. But before we get there, subscribe to my channel. I have over 30 years in this business, and I want to share with you some of the conversations we have with our clients, like this one in particular, so that you don't make costly mistakes. So I'm going to start with a fairly dangerous premise here, and I'm going to assume that you actually have a retirement plan. I know the majority of people don't, but for those who do, you kind of know what return you need over the long term in order to pursue your retirement. So the question for you is, what do you do now with that information already in hand? For those of you who don't have a plan, will the headlines be the driving factor behind what you do or don't do for your portfolio? For those with a plan, they at least have been empowered with some information to begin with as to whether or not they're on the right track. And herein lies the benefit of planning. And I don't want to harp on this right now because I want to get into the whole concept of war and what do we do with the portfolio. But it really does beg the question as to how much preparation you have done, not just for retirement, but for the events that will happen during that retirement period. So whether you do or don't have a retirement plan, let me do some role playing with you right now and play the role of your proactive financial advisor and share with you the conversations we're having right now with our clients to empower them so that they can make the decisions that fit into what they need to do looking forward to pursue their retirement goals. Now, I spend an awful lot of time on various conference calls, and one of them was with a group called Ned Davis Research. And what they have done is they have chronicled since 1914 33 different events up until now that could be characterized as wars, conflicts, incursions, call them whatever you will, but things that could change the course of the world through some military action. And the reality has been, since 1914, that the trend of the market, even in the face of all of these events that have occurred over time, has been in our favor. Certainly there are times it goes up, times it goes down. There is no guarantee, right? But over the long run, the markets are in our favor, even in the face of military conflict. So how does that play out now? So I believe, as a financial planner talking with you, my client, that there are 3 items we have to address with you. First, your retirement math. Second, your emotions. And third, your stage in life. So let me go through those very quickly. The math. And here is where I say all the time that I think our industry has done a lousy job of preparing you, particularly in times of this, because the industry tells you as long as you have the math, as long as you have the numbers, as long as you've hit your nest egg, you're fine. You don't have to do anything. Is that how you're feeling right now? My guess is for many of you listening right now, it could feel a little bit unsettling, even if you've done the plan and even if you know the math is correct. So we go into the second item, which is addressing your emotions. How are you feeling about this right now? Because for many, the headlines do drive us to make decisions. Emotions are much stronger than fact. Studies tell us in terms of how we behave. So we really have to address both the emotions and the math. And then the third item I have to deal with is your stage of life. How far into retirement are you? Or are you already retired, yet to be retired? Are you now in your late 70s or 80s? And how now, given that we've had a long retirement, how do we address these items that are going on overseas with regards to our portfolio? We have to put this all into the mix to help our clients understand what they should and should not do. So let me take you to my screen for just a moment. In 2015, researchers at the Swiss Finance Institute looked at U.S. military conflicts after World War II and found that in cases when there is a pre-war phase, an increase in the war likelihood tends to decrease stock prices, but the ultimate outbreak of a war increases them. However, in cases when a war starts as a surprise, the outbreak of a war decreases stock prices. So what we're feeling right now is the crush of, whether it was the pre-war phase or surprise, depending upon who you're reading, that stock prices are in decline. So what do? War does not necessarily imply lackluster returns for domestic stocks. Quite the contrary. Stocks have outperformed their long-term averages during wars. On the other hand, bonds, usually a safe harbor during tumultuous times, have performed below their historic averages during periods of war. The next article I want to share with you is about the global ramifications of the conflict in Eastern Europe and the fact that they are hard to predict. An outright attack by Russian troops could cause dizzying spikes in energy and food prices, fuel inflation fears, and spook investors, a combination that threatens investment and growth in economies around the world. However harsh the effects, the immediate impact will be nowhere near as devastating as the sudden economic shutdowns first caused by the coronavirus in 2020. Still, economic growth, earnings, valuation, interest rates, inflation, and a host of other factors will ultimately drive the future direction of the stock and the bond markets. While a knee-jerk plunge is possible when the war breaks out, history suggests that any market decline should be short-lived. So these are just two articles about history, perspective, and how potentially we think about this right now. But for everyone, it may be a different answer, again, depending upon your math, your emotions, and what stage of life you are in. But first and foremost, get empowered with what stock markets do or don't do typically, certainly no guarantees looking forward, and really get a handle on and not overreact to circumstances overseas, because that overreaction could be the biggest mistake you make for your retirement.